Welcome back to Hardball. Certain aspects of the American economy, like auto and retail sales, are surprisingly now showing some signs of improvement. So does this mean the economy has hit bottom and is starting to bounce upward? God, it's Jim Cramer, sir, my man from Philadelphia, the host of CNBC's Mad Money. You, sir, must now tell us, have we hit the bottom of this hell, and are we bouncing upward, given the auto sales, given the retail sales, given the market?
Yes. The answer is a definitive yes. We ended the depression at the beginning of March. It started in September of last year. We are done with the depression, Chris Matthews.
So 63.84 on the Dow was the low point.
That's it. Yep.
How'd I know? And so those investors out there who have lost, in some cases, lots of money, large percentages of their retirement hopes, are now somewhat confident that they won't lose more in the near term in this cycle.
We went up 1,300 points. I'd like a pullback before anybody gets involved. But the stocks, the good dividend stocks, are doing very well, Chris. We have come down a huge amount. This was the second worst downturn after the Great Depression. It's just over.
Okay, what we're struck with, once again, is this fact that the market goes up as we watch CNBC throughout the day, and we do watch it like everyone does during the day. We check it in MSNBC. At the same time, it's going up. It almost hit the 8,000 today. 614,000 people lost their jobs in January, 706,000 in February, and an estimated, we get the full number tomorrow, 742,000 lost them in March. We're going to get the actual number from the Department of Labor Friday morning tomorrow. But how can joblessness be on the rise and the economy be on the rise? How can that be the case?
The economy has always bottomed, and the stock market has always bottomed ahead of jobs being lost. I think tomorrow's number will be awful. What you get is people cannot start rehiring right after they fired them. You get inventories down, companies start realizing there's more demand than they thought, then they rehire people. Give it a 3-month lag before you see unemployment be improved. But we are doing better as a country. The Geithner plan, the Bernanke plan, President Obama's got religion. He talks positively about the stock market. He did that today. They're all in, just like the American people.
In the American economic engine, what's working right now? Are the banks able to lend money despite the presence still of toxic assets? Are people beginning to consume more? Is business beginning to invest more? Is government spending and tax cuts beginning to have an impact through the stimulus plan? What's the good indicators out there of policy?
Okay, I think that retail sales are better than expected. I use, because you and I were, I got a Red Lobster, okay? The Red Lobster, Olive Garden, those are up. Look, that is just a great indicator because that's what people do. Gasoline came down. That was very important. We are seeing the stimulus and the tax returns. That definitely helped. Auto production has definitely bottomed. Off 40%. It's done. It's going to start going up because there's new loans to lend for auto. The banks, some are beginning to lend. Mortgage rates are so good. And if you put down 20%, you get a mortgage. That is freeing up. These are all positive signs of a thaw.
Do you think that we can get an economic recovery over the next couple of years without dealing with these problems we have with these bad assets, these toxic assets based upon bad mortgages? Can we solve the problem around the problem? I talked to Larry Summers a few months ago. It was at a party, but I said to him, how does cutting taxes, how does spending money on infrastructure get us past this problem that the banks aren't lending rather? And he said, well, it offsets that to some extent. Money in your pocket because of a tax cut, money in your pocket because you've got a shovel job somewhere and you're working on a bridge is an alternative way to get money into the spending pattern. But he said it also increased the asset value of people with mortgages because they have money to actually pay off their mortgage now. Can we beat this problem by going around it, of this banking problem?
I want to be clear. I said we're out of a depression. We're not out of a recession. I think that house prices have to stabilize. We have a rolling stabilization. When house prices drop 40% from the peak, Chris, that's when people come in and buy. But Larry Summers is right. We can offset it. But no, we're still in a recession. I don't want to take that off the table. It's just that we're no longer in a cash economy where the economy simply ceases to work at all.
So we're in a regular recession, meaning we're in a regular business cycle at the bottom and it's moving up, and we can count on the fact that we're going to get out of this in the reasonable near future, like a couple of years.
I think
we're
that
not
is
into something cyclical and scary, you're saying.
Right. Yeah, we're no longer, the Western world, the financial world.
Secular and scary, something really trendy and bad.
Right. Now it's just the usual look. We're going to take a little while to get the economy back, but we're no longer in a 1929-32 scenario. And I have to hand it to Geithner and Bernanke. They read The Great Depression by Galbraith. They've done exactly the opposite, and that's really smart.
Okay, inflating the economy was the smart move.
You bet. That's what they had to do. They had to break away from the playbook of Hoover.
Well, who's going to tell the French and the Germans that?
You know, I wish the Germans are still living in the Weimar Republic. They keep thinking if we flood the world with wheelbarrows of Marx, you know what happens, Chris.
Well, they had bad results the last time, as you know, Jim. President Obama acknowledged that the U.S. is partly responsible for the global economic meltdown. Here he is talking in a way that President Bush never talked on any subject.
Perhaps what helped was my willingness to acknowledge that, and it's hard to deny, that some of this contagion did start on Wall Street. As I've said back home, as I've said in public, and as I would say in private, we had a number of firms that took wild and unjustified risks. We had regulators that were asleep at the switch, and it has taken an enormous toll on the U.S. economy and has spread to the world economy.
Well, he put some blame there on the central banker, on Greenspan. He put some blame there on Wall Street. Does he get credit does he get credit from you right now for, well, let's ask you again, Jim Cramer, does he deserve credit for what he's been doing?
Now he does. He's on board initially. He was banging the bank, saying, listen, it's not the time for profits. He said in that same talk today that the stock market is the great wealth creator, and he's very sophisticated. The previous president was not sophisticated, so he didn't have a lot of respect. Obama is a very, very great learner of the situation. I don't think he would have said these things 3 months ago, honestly.
What did Bush do at Harvard Business School for 2 years?
I don't know. I mean, I was over there. I mean, maybe he was at the Kong taking down the poo-poo platter and a lot of. I have no idea what he was doing.
Well, I have no idea what that means, but it sounds right.
It was a great restaurant that you went to after you had, when you needed a little.
It makes sense. Thank you. You're always the best, Jim Cramer, my friend. Thank you. You can see Mad Money on.